Hello everyone, and happy election day to all of those in the US. Welcome to today's market snapshot. My name's Craig Erlam, Senior Market Analyst at OANDA. Now, it doesn't take a genius to work out what the major talking point in the markets is today. Of course, that is the US presidential election. For more of a preview for this election, check out yesterday's video which we put online, in which I go into a little bit more detail about what's been really impacting the election recently, which of course is centered around Hillary Clinton's emails. Today is just a bit of a follow-up from this and one last look at the markets ahead of what is likely to be a very volatile day and night for traders. For those in the UK, the polls in the US shut around midnight tonight, and we could get a result anywhere from 4 AM tomorrow. For those in Singapore, that'll be around closer to midday, and those in the US, depending on where you are, that could be you're looking at around 7 PM or so. So I think the next 24 hours is going to be massive for the markets. It's of course going to be extremely volatile, particularly in the event of what the markets would perceive to be an undesirable outcome, which is again something I touched on yesterday, that being a Trump victory, due to the uncertainty that would cause for the markets. As you can see, yesterday we did see a lot of risk appetite in the market. Really, we saw the unwinding of all the risk aversion trades from last week, and we saw the Dow and the S&P close up more than 2%. The Dow up 370 points, which is a huge swing, considering it had 9 consecutive negative sessions. That's now expected to open marginally lower today by around 30 points, just pairing some of those gains ahead of the election. We are seeing a lot more caution, I guess, today in the markets. We're not seeing any real major moves. Gold has held on to a certain amount of its recent gains, which was really driven by what's becoming known as a Trump hedge. We saw it rally towards 1300. It's currently at around 1280, so clearly there is still something of a Trump hedge in place here. But broadly speaking, we are just seeing a lot of risk aversion, a lot of caution, in the market so far today, which isn't surprising given the kind of volatility that we can see later, particularly if the Brexit vote in the UK was anything to go by. Now, right in front of you on your screen now, you should see the Real Clear Politics poll average. And as you can see today, the polls have widened slightly once again. They've gone from Clinton leading on average by 3 points to 3.2. That is still a very small lead. It does still concern me, because I think the markets are pricing in more of a lead for Hillary Clinton than just 3.2 points. We can look from the election forecast, for example, which can be found on the 538 website, that Hillary Clinton on here is believed to have a 71.6% chance of winning this election, based on the metrics used by 538.com. The betting metrics suggest it's more like 80%, and we've seen it go as high as 90%. And while I don't think the markets are priced in quite that considerably at this moment in time, I do think they are potentially leaving themselves vulnerable to some downside. I think, should we get a shock result as we did with Brexit, should Trump secure the White House, which would go against market expectations but also be the less desirable outcome for the markets, I think we could be in for some considerable, not just volatility, but for some considerable downside moves in the likes of the equity markets. I think we could see Treasury yields on the decline. I think we could see the US dollar take a hit. The Mexican peso is extremely vulnerable to a dollar presidency. The yen and the Swiss franc, I think, could appreciate considerably, benefiting from the safe haven status, which would bring their central banks in particular into focus in the coming days, because both already believe that their currencies are overvalued. So it'd be very interesting to see what the central bank response would be to this. Gold, of course, I think we could see a considerable appreciation of, because again of its safe haven aspect and the impact that a Trump presidency and the turbulence in the markets that could come from that, what that would do to the Fed's rate hike plans. I think a lot of people believe that they would push it back beyond December, which is currently priced in. So I think we are in for a volatile night, and I think everyone needs to be aware of this. To stay on top of what's going on with the markets, you can keep an eye on the OANDA MarketPulse website. Myself and all the other analysts here at OANDA will continue to be posting content on the website throughout the night. You can also follow us on Twitter as well. My Twitter handle is Craig_Forex. I will be looking to be posting. I will be up throughout the night following the election, posting about the election and tweeting as well. So keep an eye on there. And if you've got any questions, always feel free to reach out. I'm always happy to answer any questions and provide any help where I possibly can. Now, let's check out the markets. I'm going to try and keep this short because we already have been through them. We haven't seen considerable differences. You can see here that the euro dollar did pull back to around 110.40, 110.50, where it has found stability again around this previous area of support and most recent area of resistance as well. I do think I'll be surprised if we see any considerable moves from here prior to the election. I think one thing we have to consider as well is just because Hillary Clinton is a clear favourite in the markets and a clear favourite among the betting public, I think it's very much worth considering that it also depends on what results come first. Should we see Donald Trump win one of the early major swing states, that doesn't necessarily mean that Clinton isn't going to win, but it also doesn't mean that we won't see some turbulence in the markets as a result of that. So I think that's one worth thing that I think people need to consider later on this evening. But like I say, we are just seeing some stability in the euro dollar. I think should we see a Clinton victory, I think we could be seeing pricing move back. Well, initially I think we've got this 109.50 to 109 is a significant area of support, but we could see back towards even 108.50 on a relief. We could see something of a relief rally for the US dollar, potentially even moving back towards these 108 levels potentially. But I think the downside for the dollar is obviously considerably higher, and if we do see a break of that, then initially I'd be looking at around 112.50 to 113, but I wouldn't be surprised if really we're looking back up towards 114, 115s over the next couple of days. With the US dollar, like I say, suffering quite considerably, suffering a backlash really from a Trump victory here. Of course, none of this is a political statement, of course, from the markets. We've got to consider this is very much what is preferable for the markets. In continuity is always more preferential for the markets. The unknown, the uncertainty that will come with the Donald Trump victory, and not only that, but of course the threats to trade and protectionism is not market friendly. That is all the markets are responding to here. It isn't a political drive for those of you who may think otherwise. This is very much just what is desirable for the markets, and often when the economy is growing okay and we're seeing unemployment coming down and we're expecting Fed rate hikes, what is preferable for the markets is continuity, not change, especially when so much of that change is unknown. I just want to touch on dollar peso. This is something we didn't touch on in yesterday's video, and we have obviously the Mexican peso is broadly seen as the Trump risk barometer. Now, for those of you who have experienced this on advanced charting, by the way, if you click on your chart and you don't see any previous trend lines and indicators that you previously had, and all you have to do is scroll out and hopefully they should reappear on your chart, as I've just done right here. You can see that the dollar peso, we did see a rally through to the 61 fib. It did go right, 61.8 fib. We did move slightly beyond that towards 1950 before reversing lower. This move lower, clearly an indication of the market's preference, and the pesos in particular, preference to a Hillary Clinton victory, given that she is not the one that's threatening to build a wall on the Mexican border and renegotiate NAFTA, which the Mexican economy is extremely reliant upon. 80% of Mexican exports, I believe, go to the US. So that shows just how much the Mexican economy relies on US trade. Currently we're trading around these 1860 levels, but really you look at this level around 1840 through to 1830, and I think this is massive. We've got the long-term trend line here from the lows back in September 2014. We've touched this trend line on a number of occasions, but you've also got this moving average band. This is the 200 and 233 day simple moving average, and as you can see, at times when we've had the trend line providing support, we've also had that moving average band providing support just along with it. So I think a break of this 1813, 1840 level would be very significant, and you'd expect that to come in the event of a Clinton victory, and from there we could be looking back towards around these 1790 levels. But again, given the relief rally that we could potentially see in the Mexican peso, it wouldn't surprise me if in the next coming days and weeks we're heading back more towards the lows of the year prior to the Trump risk being priced in, so back towards these 17s, even back towards these 1630 to 1640 levels. Again, this is a longer term move, but these are the levels which I think we could be targeting in the Mexican peso in the event of a Clinton victory. In the event of a Trump victory, on the other hand, then I think we could see quite a rapid deterioration in the peso, and I think heading back towards, at the very least, these September highs, I think that could happen very, very rapidly indeed, and I think we could even be looking beyond that. For those levels, we may have to look back some time on the charts. As we can see here, chart is currently loading. I'm not even sure if we're going to have enough data to find the previous time that we were trading at these levels. The next obvious level, I should stress, would be 20, of course, given that it's a big round number, but it really wouldn't surprise me if we do start to move beyond that, because, like I say, the a Trump presidency is really seen as very bad for the Mexican economy. With regards to cable, let me just go into the 4-hour chart, because the daily chart is being skewed a lot by those extreme moves. We did see a rally back towards the 50 fib, I should state, from the most recent clear swing high to the flash crash swing low, and we have come off of that with the moving average band again providing additional resistance. Again, we are just seeing stabilization today. I think, should we see a Clinton victory again, I think we may even bypass this 123.30 to 123.50 support, which was the prior level of resistance, and really I think we could be heading back towards these 121 levels and back within this trading range. We could even see that 121 come under pressure because of what a Clinton victory would potentially mean for that next Fed rate hike in December. It would increase the chances, you'd think, of that Fed rate hike occurring, because that'd be one more obstacle out the way. A Trump victory, on the other hand, I think we could be headed back towards these 128s. We've got to remember that we're not going to see maybe the kind of rallies in the pound that we may see in some other currencies in the event of a Trump victory, simply because Brexit is weighing the pound down at the same time that the Trump victory would weigh on the dollar. So I think realistically we could be seeing these 127.50s, 128s, but it'll be interesting to see if we even get a push beyond there in the short to medium term. Dollar CAD, again, this is another one of those currency pairs where a Trump victory would be bad for both currencies. Again, due to the trade agreements, it's less bad for the Canadian dollar because the Canadian economy is more diverse than the Mexican economy, but I do think we potentially it'd be interesting to see exactly where we'd go. The fact that we saw the Canadian dollar strengthen more than the dollar yesterday when we saw that risk on would suggest that a Clinton victory would be bearish for this pair, and we could be looking at a move back towards these 132s, even back towards the 130s, whereas a Trump presidency may be seen as worse for the Canadian dollar, and therefore we could be looking at a move back towards these 135 levels and beyond. But like I say, I think this is going to be one of the less volatile of all the currencies. I do think there'll obviously be volatility here, but maybe less so than what you'll get elsewhere. This is the big one for me, or one of the big ones. This is your ultimate risk-off currency, being the yen, against your most at risk, or one of your most at risk currencies being the US dollar. Again, a Clinton victory, and we could be looking back towards these 107.50s, 108s and beyond. Again, a big level for the dollar yen, given that we've got this prior level of resistance and we've got this 200 and 233 moving average band. The downside risk is far more substantial here, because you'd have dollar weakness combined with the safe haven drive for the yen, and I think we'd see this Ichimoku cloud broken quite quickly, and we could be looking at a move back towards 100 in the dollar yen. Little update on gold, as I've already mentioned, we have seen it pull back quite a bit yesterday, but we're still trading at these 1280, which means it suggests the Trump hedge is very much still at play. I think in the event of a Trump victory, I really do think we could see some significant risk aversion. I think 1300 wouldn't really hold for very long. 1350 would potentially come under a lot of strain, and we could even be looking back towards the 1400 levels here. I think the risk aversion combined with the impact this would have on Fed rate hike expectations could see gold rally quite a bit, whereas the opposite being true with the Clinton victory, I think 1250 could come under quite significant pressure quite quickly, and we could be headed back towards even $1,200 in gold. Finally, a look at the indices, and we can see that the Dow actually rallied through that descending trend line yesterday. It'd be interesting actually to see if we just change the point here, if that makes much difference. It doesn't. Clearly not that significant a trend line on this chart, but we are trading now back at the highs of the last 3 to 4 weeks. We did run into resistance here once again, which I think is quite significant, but again it does suggest that markets are particularly a little complacent, because during this period Clinton's lead was higher than it currently is, according to the polls, and yet markets seem just as confident nonetheless that she is going to win this election. So again, another sign that we're potentially seeing some vulnerability in these markets. Again, I think the upside risk is much more smaller than the downside risk here. Upside risk coming from a Clinton victory, with the next key level, of course, like I say, being around 18,400, which is this previous zone of resistance, and then through there we could be looking at 18,550. And then 18,650, which is going to be these past highs. But I think the downside risk could be quite significant. I'm seeing a lot of very bearish calls in the event of a Trump victory, looking at 10 to 15%. People suggesting, that people suggesting that could happen really quite rapidly. And obviously a 10%. A 10% decline in here from the 18,228s. You're looking at around 2,000. You're looking at around. Let me check this out. For some reason my head isn't working. You're looking at around 16,400 in the event of a 10% decline, which, as I say, very, very significant. You're looking at a move all the way back to here. Quite a substantial decline that you're looking at in the event of a Trump victory, if, of course, people are to be believed. I think initially, really, we'd be looking at 17,650 coming under pressure. We could even be looking back towards these 17,000 levels if the shock and awe really does hit in, and it all then depends on just how risk averse the market becomes, how much the panic sets in, how much we saw after Brexit, for example. We saw some very, very strong selling in the immediate aftermath, and then things did calm down shortly after. The short-term reaction tends to be stronger than it needs to be, so it's worth taking that into consideration as well. And I think because of that, I do think the downside risk here very much outweighs the upside. For more in-depth news and analysis, check out OANDA MarketPulse at MarketPulse.com. You can also find out more about OANDA and sign up for a free demo account at OANDA.com. Here you'll also get access to OANDA Forex Labs, which has a lot of great tools designed to help you with your trading.